What is going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. So for the next like 2 to 3 days, I'm going to try doing some shorts as well, try to squeeze those in. I'm trying to fill in with homework with the new semester, and I had to work 3 12s in a row. But I want to go over this covered call ETF. I'm trying and experimenting with. It's cheap. Good experiment money. It's play money to play around. It has monthly dividend distribution. This one, compared to TSLY, actually does it with shares. So I'm going to explain to you what their strategy is. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check this cover call ETF out right now. And that is the KraneShares China Internet and Covered Call Strategy ETF. I'm going to experiment with these guys. So their year range is $19.52 to $25. They hit a drop. And their day range was $19.77 to $20. Previous close was $20.08. So I'm going to explain to you why I'm buying them. And I'm experimenting with them because there's a lot of opportunities. I actually emailed M1 Finance to see if they could implement these guys in their M1 Finance fractional shares or funds. And they actually did that with TSLY ETF. So I kind of made the announcement on Twitter. So TSLY is in M1 Finance now. But we need to look at these guys. They're a little bit more unique. And I see them as a little bit more stable. And of course, it's not financial advice for entertainment purposes only. Disclaimer in the description. And at the end of the video, I'll go over a disclaimer. But let's look at these guys a little bit and why I'm buying them. I'm going to explain to you why I'm checking these guys out and just scoping them out. So KLIP is their symbol. So this time, they're a little bit different versus TSLY. The KraneShares China Internet and Covered Call Strategy ETF, the ticker is KLIP, seeks to provide current income by following a covered call or buy right strategy. KLIP buys shares of the KraneShares CSI China Internet ETF, KWEB is a symbol, and writes or sells corresponding call options on KWEB. Both KLIP. Do you see this right here? They buy shares of them, unlike TSLY. And I'm going to have to do an in-depth review again on TSLY to explain to you guys why, it's still not like a permanent covered call ETF, but I'm experimenting with that one as well. So I'm going to go a little bit more in depth with those guys. So writes and sells corresponding call options in KWEB. Both KLIP and KWEB are benchmarked in the CSI Overseas China Internet Index, which tracks the performance of the investable universe of publicly traded China-based companies in the internet sector. KLIP can provide investors with attractive current yield while retaining cap participation in the potential price gains of KWEB. So here's their features. A covered call ETF is an exchange traded fund that provides, gosh, I can't talk today, investors with premium income by writing options on stocks or ETFs. Now, writing covered calls may produce higher yields during periods of market volatility. Another thing is covered call ETFs manage the options exposure for investors, which can be more economical and time efficient than buying individual stock options. Why I'm doing it right now. I'm going to learn how to do options over time, but right now, puts, options, I'm going to let these funds do it. So here's their features. So again, they sell covered call options on KWEB, which is an established ETF with deep options market. That's important. Now, this could be the wave of like the new ones that start doing this, because you're starting to see, and like Yield Max doing a distinct investing strategy. And these guys are doing it with a ETF. So KWEB provides exposure to the China internet sector, which has been historically more volatile than the U.S. internet technology sector. KLIP has the potential to provide higher yields than covered call strategies based on the U.S. and other markets. Combining allocations on both KWEB and KLIP can produce a targeted growth and income strategy by maintaining upside while trading performance of uncertainty for more stable income. KLIP provides monthly distributions. Here's the expense ratio, 0.95%. That's high, okay? But again, here's their yield is 60.92%. So let's look at KWEB. So I'm just looking at the holdings of KWEB. They have Alibaba, NetEase, KE Holdings, Crypt.com Group Ltd. So their assets are Tencent Holdings Ltd. That's a high one. Alibaba's pretty high as well. So there's a lot of volatility with these guys. That's really crazy with this covered call strategy. So here's our growth of $10,000. So there's a lot of volatility. There's January 2021. They were way up there and then they went down. This is back in 2014 when they started this. And what is it right now? Percent growth is 24.68%. Okay. That's since inception. The past 5 years, growth was what? It's at the highest point was 74.47%. So you're seeing, you just need to look inside of both of these to understand what's going on. That's why I studied QYLD, RYLD, and XYLD, and JEPI and Devo and all them. I'm eventually going to add those. This is one I may add on M1 Finance just because of the potential with these guys. And TSLY, I'm going to see what I can do with E-Trade first and try the waterfall effect and go from there. I may do it even with these guys in E-Trade. I haven't really decided completely what I'm going to do, but I did invest in these guys, and I do have, I think, like 20 or so shares. And if I can get to actually consistent $600 of this income, I mean, that can be an opportunity to buy dividend stocks. I'm only doing this to buy other dividend stocks, and I have like some money to supplement my travel nurse pay, which will go bye-bye eventually once I become a nurse practitioner, and maybe I can be a travel nurse practitioner. But the thing is, that money is not going to always be there, and I can get laid off tomorrow as a travel nurse. I mean, money is a big thing with hospitals, and we are expensive. So looking at all of this, this is what kind of is my strategy. Now I'm going to jump to the dividend history of KLIP. Again, there's not a complete amount of reliability with this. It's going to go up and down. It's not going to be consistent, but it's one of those things, if you can get consistent $200, $300, $400 or $600, which I'm going to potentially experiment and try to do this with all these, with Yield Max, and eventually use that, like I said, to buy dividend growth stocks. My goal on M1 Finance, like I said, is to have those income stocks, even like Arbor Realty Trust, to buy dividend growth stocks and then let it fly. Because, when you have stocks like Starbucks, JP Morgan, I'd say Key Corp, they're not too bad. Conagra Brands, Clorox, I see those way more reliable than these covered call ETFs or high income ETFs, or even some business development companies. Business development companies have, a lot of volatility as well, and there's some uncertainty. So, but they do have high dividends. So if you look at what's going on, what potentially, I mean, I wish if I had be honest with you, $100,000 right now, I would experiment with this just to see what the heck, and not all $100,000, but, X amount of dollars to see what I can do with consistent income to start buying other dividend stocks. I would love to do that. And that's one thing that I'm considering doing. And long-term wise, being 37 and almost 38, it's going to help with, because I want something to where I don't want to put any more money in dividend stocks. Okay. I want to put it in ETFs like VOO, VTI in the future, dividend growth stocks, get my net worth, net asset value up and stuff. This is not a clear-cut permanent thing or long-term thing that I would consider. This is something that I'm using play money with. Now, I would feel a lot more confident putting money in SCHD versus these guys. I would even, what would be another dividend stock that I would highly consider over this? Realty Income, a little bit more reliability. Main Street Capital. I'm just giving you examples. This is an experiment. And again, my YouTube channel shows you my dividend investing strategies. Don't take this like it's the Bible. I'm just showing you some strategies I'm doing. It could blow up in my face. This is why I'm doing this and using this play money with some of these stocks. Now, I loaded up on KeyCorp today, and I got 400 plus shares. I feel way more confident with 400 shares of KeyCorp than I do with this strategy, but I want to see what can happen. And could I get to consistent $600 a month and then use that $600 to buy APLY and the new one with, some of these other yield max, covered call ETFs that are a little bit more, I see them a little bit more stable than TSLY. TSLY is a good experiment though. And I may throw TSLY in M1 Finance if they start, becoming a solid strategy. Now, QYLD, RYLD, and XYLD, they're excellent covered call ETFs. If you throw it in M1 Finance and you have enough money, that's a consistent basis of income that you can use to buy fractional shares, like dividend growth stocks. But that's what I'm just telling you what I'm going to try to do with KLIP and these covered call ETFs. They're not completely reliable. It's like, you have that friend that like, oh yeah, let's go out. Then you text them, hey, you want to go out? Oh no, I don't feel like going out. That's kind of the thought process. It's not a lot of consistency. But then sometimes I'll call you, hey, let's go out, and then you do well, with the dividends, with the covered call options. So I'm just trying to give you an example of my, with KLIP. It's not the ultimate strategy, but it's something I'm doing with my play money. So now I'm going to jump to my disclaimer. I'm done, providing examples of kind of my thought process with KLIP. So I hope you guys enjoy this video. And if you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos for potential passive income strategies that I do. And again, this is for entertainment purposes only. Take care. So as a reminder, this is a disclaimer notice. This is not financial advice for entertainment purposes only. Disclaimer in the description. Always consult with a financial advisor regarding financial advice. I do not give financial advice. I will tell you I do not give financial advice. There's always a risk regarding investing and you can lose a lot of money. My channel is for entertainment purposes only, and I reveal to you my dividend investing journey. Do not take this with any form of financial advice in these videos. I hope you enjoy my video, and make sure you subscribe and hit the notification bell so you don't miss future videos. Thank you so much for watching this.